We'll just let it work for a little bit to get some people in. Um, we were down at the NOLA show over the last week, Wednesday, Thursday, Friday. Well, really Thursday, Friday. Um, Pretty optimistic group, all in. Everyone is pretty happy there. I think as the industry goes, they probably all made some money.
Yeah, I'm sure everybody was just happy to get together in person again.
Yes, that was for sure. Very lightly attended by the Canadians, but very well represented by the Europeans, which was kind of interesting.
Huh. Yeah, could go figure that one.
Right.
Um,
Um, and then what this week? There's that LMC show going on. I
yeah,
think.
LMC is going on, I believe, yesterday, today, maybe through tomorrow.
Got it. Got it. All right. Why don't we fire this thing up here? Welcome everybody. It is lumber. Oh, you know what? Let me do this. I always like to see when the people start rolling in on LinkedIn, so I can. I put that up on my phone. So if I'm looking down, it's generally because I'm looking at my phone to see who is on with us on LinkedIn. Um, Here we go. Oh, perfect. All right. We've got a crew. Hello, everyone. All right. We're going to fire it up here. Um, Welcome. This is Lumber Futures from the Free Seats. Greg Kuta, Westline Capital, Mike Wisnefski with Materials Exchange. And this goal of this show is to provide a little commentary on the market over the last 5 trading days, and then a bit of education to make you a more informed trader. So, hello and welcome, Greg. If
Hello,
you want
hello.
to throw in the chat where you're from, we love to hear that. And of course, if you ever have any questions, throw them up in the chat and we can answer those questions. So, first thing we'll do is let's bring up the review and
We'll jump right into the charts, Mike, and I think we'll discuss obviously the last week, and then we'll kind of talk about November expiration yesterday and the concept that we discussed last week, the idea of exchange for physical EFP, and actually how it played out for this November expiration. But
perfect.
first things first, a week ago, November was in the call it a 585, 575 area. Later in the week, so this was as of last Tuesday, later in the week on Friday, November actually plunged down to the 531 area. And you'll see it here on the November expiration chart. So this is as of this morning. This reflects yesterday's expiration. November went off at 536 and did trade as low as 531, 531.10. So there was volume that traded in this 545 to 536 area.
And then what a difference a day makes.
Yeah,
Um,
yeah, and so we'll come back to some of these, but then you get January, and here's January today, where yesterday January expired at January closed at 637. Today we're limit up. We're in the six. We're actually lock limit at 667. There are 44 contracts in January in the pool right now.
Yep, here I got it. I got it live
Oh,
up there right now.
perfect. And you can see on relatively light volume, but the mudslides, the torrential rains in the Vancouver area, in the Pacific Northwest, are kind of forcing people in with the idea that stuff's not going to ship on time. I know certain sawmills have come out and said that they can't truck quick trucks into Vancouver, and then also rail. CN has come out and said certain rail lines have been washed out, certain roads have been washed out in and out of Vancouver. So it's creating disruptions, to say the least, right now.
Yeah, it's you know that's an interesting part of the world. In September, they were worried it was going to burn down. Now they're
Yeah.
worried it's going to wash away.
I've been joking with my counterparts in BC that if they see flying locusts, they better leave town. You
Yeah,
go from one extreme to the other. It's pretty unbelievable to see that kind of change. They had upwards of 10 inches of rain in certain areas in a 24 to 48 hour period. So just complete chaos in certain areas that were literally a month ago bone dry.
Yep. Refill the reservoir.
Yeah, exactly. So if we go back to, I always like to reference the basis chart. So here's November expiration at 536. Here's that November basis. So we actually went off at a $14 November at a $14 discount. So cash was at a $14 premium to November. So right in line with that 5-year average of about $17. So the convergence did take place swiftly, severely. I think a lot of people had anticipated the convergence would take place to the upside. You don't get to pick the direction. It did play out. It just played out to the downside with this expiration. And so when you look at that Nov-Jan spread, a week ago, that spread was in the negative 49 area. As November plunged relative to January, the spread expired somewhere around $100 under. So this was as of yesterday's expiration.
And that's the perfect example of the difference between prompt wood and 2 months out.
Yeah, exactly. And right now, again, based upon the structure in futures, this is the hope trade in that today didn't pan out, but there's hope around the corner. Q1 spring needs, and that's what the pricing reflects when you look at. Realistically, print is going to be somewhere in that unchanged. My guess is anywhere from a 540 to 555 area, depending on which sawmill you talk to. And then you have January limit up today at 667. The hope lies along the price curve in futures right now. And so I'll bring up, this is the January chart. This is as of a week ago. We were in this 682 area. The market, see again, we had fallen 6 days in a row. We had fallen down, got as low as the 619, 621 area. Get the mudslide news, the torrential rain news, the impact on shipping, on rail, on trucks, and here we are. In 2 days, we've gone from the 620 area up to 667.
Yeah, that's a sharp turnaround. I'm going to show my chart here. A couple targets that I just threw up as I'm looking at this. Here we go. So the high of this previous move, which was about 7 days ago, was 790 cents.
Yep.
So basically, you got a target for 700. It wouldn't surprise me to be there tomorrow, probably. But then after that, you kind of have this area to run. The next target would really be about an 825.
Yeah, and I think, again, this rally is going to be predicated on, do you see a build in open interest? And then more importantly, not only do you get stability in physical cash pricing, but you get upward momentum in cash, where cash gets dragged up with the futures market. Ultimately, convergence takes place. It's just a question of, if we're going to see it to the upside, then cash is going to need to catch fire. You're going to need to see this building open interest structure, and you're going to see cash, the mills, OTM, and you're going to see pricing in physical cash really move violently step in step with futures. If futures runs too far out ahead without the cash to back it up, then inevitably, the second you run out of that buy paper, the market gets called back down to reality. So that's the ongoing structure. And I'm going to jump forward here, Mike, but you can see this is a daily continuation chart. And what a continuation chart is, this just plots the daily price of lumber front month. And then as that front month expires, it tracks the next month out. So this is September expiration here at 454.40. November was trading substantially higher at a massive premium to September expiration. We left this gap on the expiration chart, on the continuation chart, and then move forward. Here's November expiration at 536. And then you see the resulting January trade today, where you've left this massive gap to the downside now. And this shows that you don't necessarily have to fill it right away, that you can stay at this elevated premium. But that's the structure we have in play in futures right now, where we've got this elevated premium in futures, where you have this huge basis opportunity between cash and futures.
Yep. I'm going to throw my chart up one more time here. Something that I'm looking at. We're basically in the middle of the kind of recent range of January futures. So this is just January only. And you go back to the high point here was the beginning of July. We had another peak here in mid October. The valley was mid to late August. But at least half of the time since the middle of the summer has been spent between 700 and we'll call it 600.
Yeah, and I think at the end of the day, futures, when you look at the price curve in futures, this elevated rise the further you go out. I mean, the market seems to think that stability, equilibrium is going to be in that 600 to 700 area moving forward, and that's kind of why you attempt to break out in either direction, you kind of get pushed back into this this average price level that you referenced here.
Yep. Now, the thing about being in the middle of the range is it could do one of three things. It could stay there, it could go up, or it could go down. So these are, I think, the most difficult times to actually be a directional trader, just because it's almost 50-50 go up or go down when you really look at it.
And so, Mike, that's a great point, and this is where you can't assume the industry's risk. There's no such thing as the blanket approach here. I always preach this time and time again, that where is your risk? Walk through your yard, walk through your sawmill. Where is your risk? Is the risk in this market going from 650 to 750 or 800, or is the risk going from 650 back to 550 or lower? And I think that's the critical thing, especially this time of the year, given the seasonality of lumber bottoming out now, knowing that spring lies ahead. Where is your risk? And I think it's critical for people, don't answer the industry's, don't assume the industry's risk, look and define your own risk. And in doing that, it becomes a lot easier to develop a trading strategy in futures, let alone what you should be doing in physical cash as well.
That's perfect. Sage advice. All right. So I really wanted to, talk to Greg before this, go back to the EFP situation, because it is such a misunderstood way of procuring wood, or just the whole process is misunderstood. So we're going to bring Greg's slide up here one more time. And Greg has actually had some EFPs on this expiration, and is in the midst of more to come. But why don't you just recap it one more time real quick?
Yeah, so again, EFP, exchange for physical, you're exchanging a futures contract for a physical carload of cash. That's you're taking the futures and you're moving it into a physical cash car. So there, you have somebody that's long the futures, you have somebody that's short the futures. They're picking a strike price or a designated price where they want to exchange those futures contracts. That offsets the underlying futures position, and in turn, the buy side gets a physical carload of cash, the sell side sells a physical carload of cash at that price. So in
And
its
what's
simplest
important,
form,
what
yeah, I'm sorry,
it's
go ahead, Mike.
important, it's a known counterparty. You're not doing this anonymously. You're
Correct.
coming to the table with a known counterparty, and this happens outside of the, I don't want to say the governance, but outside of the eye of the CME. You do your negotiation, and then you bring your package as a group to the CME and say, okay, we have agreed to do an exchange for physical. So
Yeah,
it's
and
between
so
two known counterparties.
yeah, exactly. And so I want to just reference this last point. Can execute any time during the futures contract life up until the last business day of the spot trading month. So November is the spot month. In theory, you could EFP through the end of this month, last business day of this month. 95% are done in the actual spot month. And when you look at the actual numbers for November expiration here. Prior to yesterday, there were 14 EFPs done month to date. They were all done in the spot month. There were 54 outstanding November contracts left as of this morning.
Okay, hang on for a
So
second. When you say spot month, what you're spot month means the expiring contract month.
correct.
So
Yep.
it is November futures. All of the EFPs were done in November futures.
Correct. Correct.
So that's what spot month means.
Yep.
Just
So no, that's a good point. Um, So you have 54 as of this morning, and I'm looking at my, and I'll kind of go jump back here, but here's that open interest. So where do you see this? Mike referenced this link in our last meeting. This is something the CME publishes on a daily basis. This shows total open interest. It gives a breakdown of monthly open interest. So if you see right here, okay, this is November futures. They expired at 5:36. Total contracts traded for yesterday were 20 contracts. Open interest was 54, up 13. So there are 54 outstanding November contracts left that either have to be EFP'd or physically delivered. I can tell you that with absolute certainty, all 54 will get EFP'd. So that's again, known counterparty risk. The buy side knows who the sell side is. The sell side knows who the buy side is, and they're negotiating what strike price they want to match their futures position off at. But more importantly, they're negotiating what actual cash contracts do they want to take possession of. On the buy side, what cash contracts are the sawmills willing to take to sell to them on the sell side? So jumping
okay.
back here. Yeah, I know I like to jump around, Mike, so go ahead.
No, I was gonna say. So I went off long. I had a long futures contract. I didn't really, but if I was, why don't we jump to your example? I am ABC Distribution Yard, and I had 5 cars that I went off long. And what I don't want is the futures tally, which is 2x4, of a specific percentage of each length. What I do want is I want 5 cars of 2x4. Well, I want a car of 2x4 12s. I want a car of 2x4 92 and 5/8 studs. I want a car of 2x4 104 and 5/8. So you guys get the pictures. I want to pick what I want to buy. What's the next step? I have to go find a counterparty. So I reach out to Greg, who's my broker, and Greg has the relationship with, let's say, Vandalay, correct?
Yep.
So through Greg, we figure out that Vandalay is willing to sell me a car of 2x4, all 12-foot. What's the next step?
And so, Mike, I just want to when you're negotiating the physical cash car tally, you will do this mill direct, just like you have your traditional. You're going to buy a traditional cash car of lumber. I'm going to be responsible in helping you on the future side of the equation. But just like you would negotiate with a sawmill to buy a traditional cash load of lumber, you're going to do the same thing. Hey, look, Vandalay, I have 5 cars of lumber futures in November I bought. I'd like to exchange these. These are the items I'm looking for. This is where I'd like to go with the wood. And the mill's going to come back. You're going to negotiate the timing of it. You're going to negotiate the price. You're going to negotiate the tally, just like you would normally do with a physical carload of cash. You're going to do the same thing. And the mill's going to say, yay or nay, this is what we're willing to do. You're going to come to an agreement. And then once that agreement happens, then you're going to have the offsetting transaction in the futures, and then the corresponding take possession of the physical cash side of the
And
transaction. Again, this.
the one thing you left out, you negotiate the strike price as well.
Yeah, correct.
So
And the
there is a
strike
good
price, the reality with the strike price, the CME likes it within reason, meaning you're not gonna have cash, underlying physical cash trading at $555 and say we want to do $1,000 strike price. The CME is going to red flag that and say, hey, wait a minute, we want this within a certain band of where physical cash is trading, but is, as much as people get hung up on the strike price, it's just a price. Whatever that agreed strike price is, you either get the net benefit on the future side or the net benefit on the physical cash side, and
And
then
this
vice
is,
versa for the other side.
but this is important where there's a direct link, though, in your negotiation with the sawmill between the price you're paying for that cash and that future strike price.
Right, right.
So, in this example, I think you have the strike price at 570, correct? Yeah,
Yeah,
570.
yeah.
If that, for some reason, you decided to change the strike price to 580, what you would want to do, well, what should happen is that you would change the strike price of or not strike price, you would change the price of the underlying futures car up by $10 as well.
Yeah, correct. So in this example, and this doesn't, ABC distribution, I can tell you there are distribution yards that took delivery, there are office wholesalers that took delivery, there are end user retail yards that took delivery. I'm sorry, that are EFPing or take delivery, that are EFPing. So don't get hung up on the idea that it has to be a distribution yard. This can be a retail yard. This can be an office wholesaler that's going to put wood in a reload. This can be an end user. This can be a co-op. It can be anybody that physically consumes lumber has the ability to buy futures and EFP with the sawmill. So in this case, I just used the distribution yard as an example, but this is an actual, yesterday you had somebody buy 5 cars of November lumber on expiration day at a 537.50 average. Um, and so print last Friday was 555. So the ABC knows who the counterparty is, who the delivering mill is. They reach out to the sawmill. Hey, how many cars do you have to EFP? Okay, we'd like to do 2x4 12s. We'd like to do 14s. We'd like to do a car of stud. We'd like to do a car of MSR. Ask for the sun, moon, and stars. That's what I tell people. Don't, all they can say no is, and you go from there. It's a negotiation, just like you buy the traditional cash. Ask for anything and see what they have to say. So that's my suggestion in dealing in doing an EFP on the buy side is talk to the mill and see what they have. A lot of times they're very willing to negotiate on what they're willing to do. So in this instance, the strike price, and you're going to see a big block of EFPs done today on tomorrow's open interest. So today we're using a 570 strike price. So I bought these 5 cars yesterday at 537.50. I'm going to offset that futures position at 570. Okay, so you'll see this referenced in the next slide. So the idea that I'm exchanging the futures position for a carload of cash at 570, and I know, Mike, you brought this up and it gets confusing. You're not actually buying that car at 570. You have to take into consideration you bought the futures at 537.50. So this is the long side of futures at 537.50. The strike price that you negotiated with the mill to offset the futures is 570. So there's a $32.50 profit derived in the futures transaction that you apply to physical cash. So
Well, but
your
that,
I'm sorry, go ahead, Mike.
that money goes directly into your futures account.
Correct. That's legitimate. That's your profit sitting in your futures count right now.
So it's going to be multiplied times 110. So
Yep.
it's going to be somewhere around $3,500 of profit will go directly into your futures account.
Right. So, and on those 5 cars, you're talking, just under $18,000.
Right. Now, then you are going to pay that sawmill. They are going to invoice you just like a normal cash transaction for whatever your negotiated price was for the 2x4 12s.
Correct.
And, in this example, it could have been, 650, 670, who knows, right? But it's important to note whatever the difference is between the strike price and what your futures long position is, that will either go credit or debit directly into your futures account only. And then on the cash side, that's a straight transaction from the seller to you, and you just pay the invoice as it comes in.
Yeah, and the other thing that I'll say that, like we do this from a correlation standpoint. You not only have a basis between cash and futures, the relationship between cash and futures, but you also have the basis, the relationship, the correlation between different cash species. So I can correlate a car of 2x4, two and better. I can take 12s versus 14s. I can correlate that to studs. I can correlate it to other species. A lot of companies have this internal correlation that they use, but we also have this, and this is something we readily use to correlate. Okay, we want to not only correlate the futures market to physical cash, but we want to correlate the different cash items to each other to see what kind of adder or deductor should we be using. And you know, people do this with their tally calculators. Well, this equates to this. This is no different. You're going to be doing the same thing. If something has an adder to it, we want to be able to equate this back to our bread and butter type item, two and better number, Western SPF, two and better, 2x4. So we're always going to try to equate it back to that bread and butter item. But the correlation studies exist to not only relate futures to cash, but different cash items internally as well.
So at the end of the day, it's a way to procure lumber. Um, the thing I would just recommend is work with a good broker and make sure you've got all your paperwork done and have it done properly. So the CME doesn't get mad about something you did improperly.
Yeah, and that's something that the hurdles are in place to where everything is documented to the nth degree, and there, the idea that there's the same amount of paperwork involved in doing this, even though there's an extra transaction with the future side of it. The same amount of paperwork is involved on the physical cash side when you EFP. So again, I know this is a foreign concept for a lot of people on the outside looking in. Again, what is an EFP? It's simply just an exchange for a physical carload of cash. And as long as you have those relationships with mills that use futures or other counterparties that use futures on the sell side, you definitely can use this to your advantage in taking advantage of a big discount in the market or a big premium in the market.
For sure. All right. Well, let's wrap this up. Thanks again, Greg, for coming on. Let me shut this one off. Next week we are going to start to dabble in. Wait a minute. Is next week? No, next week is Thanksgiving.
Right.
I think we'll take next week off,
Okay.
and then when we come back in December, or I guess it'll be the end of November, November 30th, probably.
Yep.
We're going to start talking about options, and we'll
Uh-oh.
take our time and work through options. But if you guys have any questions outside of this, let us know. So you can expect to see us in about 2 weeks. We're going to talk options. We're going to see where the market had gone over those 2 weeks. Could be an interesting move. We're right in the middle. Maybe we're up, maybe we're down. Yeah.
Yeah, I appreciate it, Mike. And again, if anybody, I know a lot of people watch this after the fact. So if you do have any questions, please contact Mike or myself. If there's anything that we're not covering, you have questions on or want us to cover in the future, we want to cover as much of the things that we take for granted, or at least that I take for granted. If you have any questions, please, we love explaining stuff that's seemingly obvious to myself. So.
All right. Sounds good. Take care, everyone. Have a safe holiday, and we'll see you back here in 2 weeks.
Happy Thanksgiving, everybody. Thanks, Mike.